Well, the only thing that may be hotter than the weather this month is the crypto and digital asset industry. From record highs to the price of Bitcoin to the historic passing of the Genius Act, July has been a remarkable month for the digital asset industry. And joining me now is our friend and our Georgia source for all things crypto. That is NYU professor and Rubicon Digital Assets CEO, Greg Johnson, to share his insights on all the latest developments. Greg, always learn so much from you when we have these conversations. So big question here, what has been driving this latest crypto bull market? I mean, Bitcoin is going crazy right now.
It really is. And Faith, it's always good to be with you and to join you and the viewers. And look, it has been a historic month for the digital asset industry. And there has been no shortage of hype in crypto over the years. But in this case, it's all worth it. It has been, it's not even over, but it's been a historic month on so many levels. The irony is what's driving this historic nature is actually normalcy. Normalcy. What do I mean by that? For the first time in the United States, we've actually seen meaningful crypto legislation passed. Something we've been talking about for over a year here at 11 Alive, something called the Genius Act, designed to bring law into one dimension of the crypto industry. Just by having federal law established for one piece of crypto has lifted the tide for so many other elements. The other thing is that the normalization more broadly of crypto has been driving the sky-high record prices of coins like Bitcoin and many others that we've seen so far this month. And regardless of where you sit on the partisan aisle, all of this can be traced back to the Trump administration, which has opened up the doors to regulating crypto, normalizing it, and bringing the industry to the state that it's in presently.
The Genius Act, that is now the law of the land, right? So can you remind everyone why it's considered to be, by many, a landmark piece of legislation here?
Originally, stablecoins were created as a way for people using crypto to exchange from one crypto project to another. You know, they were concerned, my goodness, it's so volatile, even amongst ourselves, my goodness, you know, we're losing value. We need to develop a type of cryptocurrency, we'll call it a stablecoin, and we'll peg or we'll anchor its value to something like the US dollar. Originally, that was the intent, but it jumped the rails. And actually, stablecoins has become one of the killer apps of the digital asset industry. It's something that is revolutionizing the way that companies will run their businesses, the way that banks are going to have to operate. This legislation, this law impacts everything from your bank to Zelle and everyone along the payments infrastructure. So that's one. The second reason why people are saying this is so historic is there have been concerns over the past decade that the US was losing its grip on being the dominant currency globally, meaning everyone using the dollar for their reserve currencies, people around the world counting on the dollar for stability. And there was concern that we were losing ground. Because stablecoins offer new products all tied to the US dollar, many policymakers believe that this will allow for continued US dominance, which has been a good thing over the past 75 years, that's for sure.
Now, Greg, if people watch our segments all the time, they should know a lot about crypto. But for those who are not following the industry as closely, can you talk about the difference between stable coins, what you just mentioned there, and Bitcoin? And do they help or hurt each other?
I suppose the best thing you could say is that they're in the fruit family, but they're very different, like apples and oranges. Look, Bitcoin is the original cryptocurrency. And it was designed to be a decentralized way for institutions or people to exchange value anonymously without any centralized institutions. So think government or business. The value of Bitcoin was depending upon all the network that was participating to produce the Bitcoin and the consumption and the use of that Bitcoin. But that original thesis has evolved. Bitcoin has become more like digital gold today, where people hold it and they're not really using it to buy a cup of coffee, I think, as people originally thought, or to buy a piece of pizza, which was the first ever transaction with Bitcoin. As we said before, stable coins came out of the crypto industry really as a solution to make it easier to transact between Bitcoin, let's say, and Ethereum or other types of cryptos within the ecosystem. Now, right now, all tides are being lifted by what's taking place with the US regulatory environment. It's having an impact both on stablecoin proliferation, the people that make those stablecoins, and it's also had a very positive impact, in my opinion, on the price of Bitcoin so far.
Absolutely an impact there. Greg, I want to ask you this. You often talk about the fact that our viewers, they might own crypto and they might not even realize that they own crypto.
Right.
How is that possible and what does that mean to investors?
And this is something that I think every investor should be paying attention to. It's one of those unintended consequences of digital assets coming to life. Many people who would never think to go out and actively buy some crypto, because of the companies they own in their portfolios, their 401ks, their retirement plans, their individual stocks, because of the stablecoin legislation, this trend towards companies owning cryptocurrency in their own portfolios, and that means investors own crypto without even realizing that they own crypto, this trend is only going to accelerate. And as a matter of fact, it's not just companies. You're seeing many pension funds that are struggling to keep up with an aging population and trying to meet the returns to support their pension payments. They have to consider more alternative investments, and crypto is finding its way into the pension system as well. So this isn't stopping. And most recently, there's a large IPO that's come into market this week that actually is being valued at a higher multiple because they've chosen to have crypto on their balance sheet on top of the product that they're developing in the tech space. So things continue to accelerate in every direction, everywhere, all at once, Faith.
Everywhere, all at once, and we know that you are at the center of it all. Greg Johnson, the CEO of Rubicon Digital Assets, our local source for all things crypto. We'll keep checking in with you, Greg. Thank you so much.
Looking forward to it, Faith. Thank you.
Thank you.